As you can see, the Q3 growth metrics are unprecedented. This acceleration in user acquisition puts us well ahead of projections.
Yet inside, a former Wall Street employee was building something he believed could sell everything to everyone.
No company should have survived years of losses. But this one grew into an empire worth over $2 trillion.
The secret wasn't a clever product. It was a decision to chase size before profit.
One idea, sketched on a cross-country drive, would quietly rewrite global commerce.
This is the story of how one garage bet on everything, and changed the world.
How does a company that loses money for years become one of the most valuable on earth?
Every retailer chased quarterly profit. This one chased scale, on faith that profit would follow.
So what is the hidden formula behind this $2 trillion contradiction? To understand the answer, we have to go back to the earliest, most chaotic days of the internet. In the mid-1990s, almost nobody trusted buying anything with a credit card online.
Even the biggest physical bookstores could only stock a fraction of what existed in print.
One man believed differently, and he was willing to bet his career crossing the country to prove it.
Somewhere on that drive, an idea for the everything store took its final shape. In the summer of 1994, that idea found its first home. In Pome, a rented garage. It sold books first, because they were simple to ship and endless in variety.
The data suggests remarkable growth potential.
We're transforming how we interact with these historic spaces, making them accessible to everyone.
The earliest days meant packing boxes by hand and driving them to the post office themselves. In 1995, the website went live, ready to ship books to every corner of the world.
Within days, orders came in faster than anyone in that garage could pack them.
Within 2 years, the company was ready to go public, chasing capital instead of profit.
In 1997, the company went public, raising the funds it needed to grow far beyond books.
The company poured its new capital into warehouses, logistics, and categories far beyond books. Music, electronics, toys. The bookstore quietly became something much bigger.
Then, in the year 2000, the dot-com bubble burst Vegas, and hundreds of internet companies vanished overnight.
This company nearly didn't survive it either. But it refused to abandon its long-term bet.
It survived the crash pulling it, and came out stronger, leaner, and ready to scale even faster.
In 2005, the company launched a membership that promised fast, unlimited shipping.
It wasn't cheap, it wasn't flashy, but it made one simple promise: speed you could count on.
Millions of packages began moving faster than any retailer had ever managed before. The same box packing hustle from that garage had scaled into a planet-sized operation.
The internal mantra behind it all: get big fast, a fee. Worry about profit later.
That single decision built more scale than any advertising campaign ever could.
And scale like that doesn't need billboards or commercials to keep growing. This company spends comparatively little turning customers into shoppers, because most already come back on their own.
Its real advertising is the habit it built into millions of daily lives.
Here is the strategy that changes everything. Keep retail margins almost razor thin.
Most retailers price for healthy profit, This company priced for market share instead.
In 2000, the company opened its platform to outside sellers, turning competitors into partners.
Every seller who joined paid a small fee for storage, shipping, and reach.
That service, quietly launched, became known as fulfillment by the company itself. Today, more than half of everything sold on the platform comes from these outside sellers. Those fees, layered on top of thin retail margins, quietly became a serious profit source.
This company treats retail as a reason to build infrastructure, not the other way around.
Every low price you see is really funded by something almost invisible, running quietly behind it.
And because that infrastructure pays the bills, retail prices can stay aggressively low.
It's a complete reversal of how retail was ever supposed to work.
But this strategy alone doesn't explain the real engine hidden deep inside this empire.
Behind every shopping cart is a much bigger business, and almost nobody notices.
In 2006, the company quietly launched a cloud computing service most people had never heard of.
That cloud service now powers a huge share of the websites and apps people use every day.
This cloud division alone generates a majority of the company's total operating profit.
Retail brings the customers in. The cloud and advertising businesses bring in the real profit.
A quiet advertising business now sits inside almost every search result on the platform.
None of it would work without the physical backbone. Thousands of warehouses moving in silence. Robots now carry entire shelves to workers, instead of workers walking to the shelves.
This is the story of a determined entrepreneur. He understood that true vision requires obsessive focus. These aren't accidents. They are deliberate, hidden engines behind an ordinary shopping cart.
One click, and the decision feels already made before doubt has a chance to creep in. Fast, predictable delivery quietly rewires how quickly people expect anything to arrive. Once you've paid for unlimited fast shipping, every purchase feels like it's already free.
This isn't manipulation in the traditional sense. It's convenience engineered into a habit.
Because the company only wins long-term if customers feel like waiting is a thing of the past.
That's a rare kind of habit in modern commerce, and it's incredibly hard to copy.
Competitors can copy the website. They can copy the warehouses. They cannot easily copy the years of infrastructure behind it. And convenience, once earned at scale, becomes the ultimate business moat.
Let's break down exactly how the money actually flows through this empire.
Most of the revenue still comes from selling and shipping physical products at thin margins.
But the cloud division, though a smaller slice of revenue, delivers a much larger slice of profit.
Then there's advertising, a business that turns search results into paid real estate.
That advertising business alone now generates tens of billions of dollars every year.
Each of these services builds one more reason than ever to cancel the subscription.
It's not one business. It's an entire ecosystem built around a single account and a single click.
And every single piece reinforces the same simple promise: more selection, faster, at lower cost.
This is a business model most competitors have tried and struggled to fully replicate. But no empire grows without serious scrutiny along the way. Warehouse working conditions and labor practices drew growing public and regulatory attention.
Regulators around the world began questioning whether the company had grown too dominant.
Automation raised efficiency, but also raised hard questions about the future of warehouse jobs.
In 2021, the founder stepped back from daily leadership, handing the reins to a new chief executive.
Rising shipping and labor costs forced tough decisions about pricing and efficiency.
And yet, through every challenge, the core habit customers had built stayed remarkably intact.
The cloud division now trains and hosts some of the world's most advanced AI systems.
A growing satellite network now promises to bring fast internet to nearly anywhere on Earth.
New fulfillment centers keep opening across new countries and categories at a rapid pace. Even healthcare and pharmacy services are now quietly folded into the same ecosystem.
The empire isn't just surviving the future, it's quietly building itself to define it.
But the biggest lesson here has nothing to do with warehouses or servers at all.
This company proved that patience with profit can be the most profitable decision of all.
Scale, when built patiently into the structure of a business, becomes almost impossible to catch up to.
The lesson isn't just for retailers. It's for anyone building something meant to compound over decades.
Sometimes the fastest way to grow is to stop chasing quarterly profit altogether and build something people rely on so deeply they never think to look elsewhere.
This is how a garage bet on everything became a $2 trillion empire.